Oh my gosh, did you hear the news? Quickfingers Luc just shut down all of his YouTube channel. All of his valuable trading videos that he was giving away for free are now gone. So you can't access those anymore. Fortunately, I have screenshots and I'm going to go over these screenshots of his videos. You know, respectfully, I don't believe that his videos should be uploaded if he doesn't want them online. And so I have not downloaded his videos. I have made videos that are more specific in certain areas that he might not have covered, but I'm always pointing back to his videos. And so there's no basic training video right now, as of now, that we can all point people to when people want to learn the QFL strategy. We just say, go to the QFL channel. So now there's no videos. And so this video is going to break down as simply as possible the basics of the QFL strategy, and also, you know, who QFL is, Quickfingers Luc, and why you should be wanting to know the strategy. It's the strategy you want to know. If you're trading cryptocurrency, you better know about this. So real quick, who is Quickfingers Luc? He's this penny stock trader that was trading cryptocurrency, and one day he stumbled onto crypto and he found out this really easy trading strategy that's really profitable, and started uploading all these trading videos for free on YouTube and taught everybody, created a cult following, and now he's like this legend, and he's done with the fame and he doesn't want it anymore. So he pulled his channel down. All of his trading videos are gone, and he's just going back to his regular everyday life. So that's who he is. And let's break down a couple more of the names that it's not just his strategy. It's very well known, like the buy the dip strategy or the dead cat bounce strategy. It's very common, but here's the thing. There's pieces of software that are made for his strategy that use his wording and his lingo. And so you're going to need this video to explain what that wording is. And so the first thing that we need to explain is this red line right here. That is called a base, also known as support, but he likes calling it a base because he wants you to forget about the term support. Here's what a base is. A base is qualified by the buyers in the market. So you see when it skyrockets up, that means there are buyers in the market. That means there's demand, okay? And look, it creates a V shape. So this is what I tell everybody all the time. All you have to do, this is a 1 hour chart. I prefer a 4 hour chart. Sometimes I'll even do a 12-hour chart. You want to look and spot for the V's. Where's the V? Right here, there's a V. Or a check mark. You can see there's a check mark. Check marks are buyers in the market. And then what you do is you draw a line right here. As you can see, he drew a line right here. And then here's what you're looking for. Now that you have this base, now once it crosses that line and it starts to melt down, I'm talking like a panic dive, as in like a plane nose diving, okay? I'm not talking about like, you know, a little foothill grinding down. I'm talking about a full-on melt. That's when you begin to buy in layers. So you buy small, medium, large, extra, extra large. And I'll go over these layers here in a second because I have them in the screenshot. This is going to be a comprehensive video, but here's the reason why you want to learn this strategy is because if you are wanting to make money at this, then you have to understand that this is all about odds. And the odds of price crossing past a base and going down in a panic dive is incredibly likely to return back to the base where you will sell. Now, here's the rule. You don't have to sell at the base. You can sell anywhere in profit. And so just to recap this whole thing, it's actually really simple. You see the V shapes, you draw the line, you see it start to melt down, and you just buy small, medium, large, extra, extra large. I'll go over like the numbers here in a minute. And then magically, it just floats back up. Now, how do you know that this is going to work? Well, all you have to do is view 2 months of price action. As you can see right here, there's about 2 months of price action. And you just say, okay, well, how far down did it drop? And the rule of thumb here is this. This is what I always tell people. Think of it like Black Friday. And are you going to buy something that's only 5 or 10% on sale? Or are you going to buy something at 25 to 50% on sale, right? It's Black Friday. Crypto is like Black Friday all the time. And so look, from about almost 5,000, it drops down to about just under 3,000. Okay, that's almost 50% off. And so as you can see, that's a safe place to buy right there. Do you get what I'm saying? So from right here, 4,000 is with 3,000, that's 25% off. So from right here, it's 25% off. And from right here, it's almost 50% off. So psychologically speaking, if somebody bought up here, like the dumb money, then as it goes down here, the dumb money looks at their account and they say, oh my gosh, my account, I bought $1,000 and now it's only worth, you know, $500 or $600. I'm going to irrationally sell. And so since price is irrationally low, you buy low, and then as it starts to float back up, you start to let go of it. Now, here's the important thing. He recommends don't get rid of everything that you bought. Keep your profits in the coin. And then as the coin starts to float up, then you sell 30% of your holdings, or 25% is also a common number in trading apps. They'll say, how much would you like to sell? And so as it starts to climb up and you feel that feeling of hot potato, you let go of 25% of your holdings in profit. And what happens is as it starts climbing up, you just keep selling 25 to 30%. And then as it starts to drop back down, now you've got more capital to buy more and rinse and repeat. You buy on these dips and you sell on the bounce. Buy on these dips, sell on the bounce. And so here's the most important thing out of all of this is that it's all about bases getting cracked. Right here, here's a base. Buyers are in the market. It's fresh. This is just recently bounced up. And now there's a panic. So it's 1 + 1 = 2, okay? Base crack plus panic. Layer down, and I tell people to layer down, from the base, 35% isn't out of the question. And from the top down, I tell people 55 to 65% is not out of the question. So that's the beginning of the strategy. Now let's move on and we'll break down the logistics and how he feels about all of this. So this is a game of odds, okay? This is all about odds. And he's saying we are completely safe with bases because there's 1,000 guys behind us looking for a good price. Now, what does he mean by that? What he's saying is that if you draw this line right here, this is the base, and boom, there's the buyers, and then it panic dives. He's saying then that's when you take the trade. Otherwise, don't take the trade. If you don't have an obvious panic, why take the trade? Because your odds are diminished. And you can see right here, you draw the line right here, it comes down, it comes back up magically. So you don't know how much it's going to go down. You're not trying to predict it. You don't have a crystal ball. You're saying, well, if it hits my first layer, my second layer, and my third layer, maybe I've got more layers down here that didn't get hit. But as it bounces back up, boom, I'm going to let go. So as you can see, what he considers these circles on the chart, he calls them safe circles. What he's saying is this safe circle represents the measurement of how far down it usually drops from this base right here. So you've got a base, and then it dropped down about this much. And so he's saying, all right, well, I'm going to buy towards the end of the circle because predictably, right, that's how far down it usually goes. I would like to buy more lower. And so that's his method that you need to drill into your head. I want you to write this on a Post-it note. Write down, please go lower. Because as it's going further down, if it doesn't go further down, you don't make money. And here's the mistake most people make. They put all of their money like right in the middle of the circle and they just buy it all. And that's fine. What he's saying is anywhere in the safe circle is safe because it'll come back up to touch this base. And it did. Like if you would have bought right here and it came down, yeah, it's going to come back up and touch the base. So that's what he means by a safe circle is like you've got this area that you've measured that's, you're predicting your odds. And you're saying, well, if it comes down here, then it's probably going to bounce back up like it did last time. And so as you can see, that's the magic. And this is why we're all freaking out about Quickfingers Luc, is because it's as simple as that. It drops down, it comes back up. It drops down, it comes back up. It drops down, it comes back up. With a panic. Now here's the grinds. These are like little foothills. You know what I mean? Like these are like the Smoky Mountains and these are the Rockies. So don't trade. I've never come up with that before, but that's what it kind of looks like, is like the Smoky Mountains, versus the Rocky Mountains. You want the Rocky Mountains. That's where all the emotion is at. So let's go to the next one, and this is the price breakdown. Now notice something really important about the price breakdown. Now it says 1,000, 1,000, 10,000, 50,000. You probably don't have that much money, okay? So drop off one of these zeros, and now it's 100, 100, 1,000, 5,000. Let's say you don't have that much money. Well, drop off that zero as well. Now you've got 10, 10, 100, 500. You feel me? And so I want you to notice something. This first number is 1/10 of that number. You know what I'm saying? So these are what he calls nibbles. And nibbles are he just can't help it. He just has to buy it. He's just impulsive and loves trading, but it's 1/10 of this layer. And oftentimes it'll be 1/100th of his layers. And this is called exponential layering. And so as it goes further down, he's getting, 10 times, like he's basically, instead of 1,000, he's getting 10,000. Instead of 100, he's getting 1,000. Instead of 10, he's getting 100. You see what I'm saying? And so there are different methods, but this is just the overall method if you are position trading, because he has two strategies, but we're going into the QFL original strategy, which is position trading with, ideally you're going to have $10,000 or more when you position trade. And so let's just go into these little notes. So he's saying the faster and deeper the fall, the safer the trade, meaning the further down it goes, the more balls of steel you're going to have when you buy this. All right. So boom, it went down. You're like, yikes. And you're buying more and more and more. You're measuring down. You want to measure down. There's tools, measuring tools in these trading panels. And I highly recommend measuring the actual percentages and then placing your money on the books. And then once your money is hit, then you list it, right? And as it goes further down, you're getting it cheaper. And so you're able to offer discounts right? Because we're a business, buy low, sell high. And so I'm offering discounts to my customers and I'm selling it at a cheaper price because I'm in profit. But with the grinds, this is where you're gonna have to pay attention, because a grind, you lose all your odds. And so what he's saying is we've grinded past the safe circle. You can't use that safe circle anymore. You need that panic. So at that point, you're pulling your money off of the books and lowering it down, pulling it off of the books again and lowering it down, because this is not QFL strategy. So here's what he's saying by this. He's saying the secret to trading is knowing your odds. And this is what the odds are all about. It's all about drawing a base and getting a panic dive. That is high odds, okay? This particular screenshot is focusing on his other video, which is account building. This is if you have under $10,000. And while a lot of people get excited about this, it's so much more high maintenance. And so if you have a life and you don't have the time to do this, then it can get really tricky, especially if you don't have alerts set up. So I'm not going to go into that here, but this quote right here is really important. It's all about knowing your odds. High odds is what we're in the business of right now. So here's the thing about QFL that everybody gets wrong. It says, you must not think, I hope this bounces so I can make a profit. Now, the only time you're going to say that is if you buy when it's not panic diving and you put in a lot of money up front. Then guess what you're going to say? You're going to say, I hope this bounces so I can make a profit. That's not what you're supposed to say. You're supposed to say, I put in a little bit of money and I really hope it goes down lower. You see what I'm saying? And so as you can see, he's got all these green arrows. Those are his buys. And then he sells on the pop real fast. Boom, boom. And then it goes down lower. And he's like, please go lower. And it goes down and he buys more and then he sells. And then it keeps going down further. And then since he's buying exponentially, as he gets more and more and more, it only has to go up a little bit before he's in profit. So he lets go of that and then it keeps going down further. And then he starts to increase his size. So he starts getting bigger as the price goes down. And by the time the price gets down here, he's like throwing in huge money and then selling it. And then throwing down incredibly huge money and selling it. Then what he's doing is he's holding on to all of his profits and then he's selling them as the price climbs up. Is this not dope? Like, this is why we all freak out about this homie right here. Like, he dropped a gem, okay? And so here's an example. You better pay attention to this. You better screenshot this right now. You better drop everything you're doing and look at this. This is him explaining probably one of the most epic trades that I've seen in a screenshot. So he's saying, I took a nibble, a small amount, right? One of those little tenths or 1/100ths of the trade. And then he nibbled again and it went up 10%. He didn't sell any because it's only like, $10, $100, $1,000 to him. He's like, I've got so much. I've got 50,000 way down here. I've got 1,000 way down here. I've got 50, So he's only taking 10, he's not selling it at 10%, not selling it at 10%. Then he nibbles again. And then he finally gets a little bit, you know what I'm saying? And then he lets go and he created free coins. All of his profits are now in sand, that crypto. And then he draws the new line and then he plays the same game. He gets a little, he gets a little, he gets a little. And then he said he finally gets some. And then he finally gets some real size. And he's saying, please go lower. Nobody is doing this. You know what everybody's doing? They're taking these lowest layers and they're putting them up here. And that's where everybody goes wrong. And that's where everybody gets stuck. And that's where everybody has to dig themselves out. And this, if you just trade how he trades, then you're great. So guess what I did? I took one for the team and I went to this chart and I measured it out. And guess what I did? I put layer numbers and arrows where he bought. So look, this is the same as this. And so look, it bounced where the base is right here. It bounced 24%. Then it dropped down 22%. So this drop from here down to here is a 22% drop, meaning like this is some gold. Like I don't know if I should be sharing this right now, but I am. Okay, so pay attention. It drops down and he gets, I know it says 10, 10, 35, 150, but let's say it says 100, 100, 350, 1500, or, 1,000, 1,000, 3,500, 15,000. You know what I'm saying? Just add the extra zeros on if you have a bigger portfolio. And so in this case, if your layering is like that, then that's $40 profit because he's selling it right there. Now add on another zero. If it's 100, 100, 350, 1500, and that's $400 profit. You feel me? You seeing this? Is this all coming to light? Now look, he draws the new base and he comes down here and he buys. He doesn't sell. He buys more. He doesn't sell. And then this is where he's like, all right, I'm going to get 35. I'm going to get 150, and then I'm going to get 1,000. Now, if we add on 2 zeros to this, right? That's 1,000, 1,000, 3,500, 15,000, 100,000. You see what I'm saying? And look at the profits on that. So the profits on that, if you have that big of an account, is a lot. You know, doom. That's what, 40,000. So you get what I'm saying. If it's not 40,000, then you drop off a zero, then it's 4,000. And if it's not, 4,000, then it's 400. And then guess what? You've got 400 in profit, and then it starts to climb up and it doubles. Now you've got 800 in profit. And then it climbs up and it doubles, right? Now you've got 16. You see how this works? Let's go and look at what he's talking about. These are like quotes that he has that I feel are like the most important quotes. And that is, he's saying, 3, 3, 10, 50. And what he means by that is, instead of 10, maybe you say 3, 3, 10, 50. That's one layering method, right? So you can replace these numbers, but just keep in mind like where he's buying it, how far down. He got it down 42% on sale from right here. Like 42% on sale. That's a big drop, okay? And from the top down, look at that. It was at 90, and so half of it is 45. So we're down here at 30. You know what I'm saying? Like from 90 to 30, like, dude, that's a huge percentage on sale. That's why he's loading up right there, is because he's like, that price is so artificially low. Boom, I'm going to load up. And then here's another layering method, which you can see 10, 10, 35, 150, 1,000. And so if you want, pause this and you can read this, but basically he's saying small, small, decent, big, ridiculously huge, although I almost never get to the ridiculously huge. With this is really important. This is something that I'm always telling people. Look, what he's saying is if you trade Bitcoin pairs, and by Bitcoin pairs, in this example, this isn't a Bitcoin pair. This is sand versus the dollar. But if you're trading sand versus Bitcoin and you're trying to make more Bitcoin and you have Bitcoin and you want to trade Bitcoin with sand and sand with Bitcoin, well, here's the thing. The bases are not as reliable, because what happens is there is arbitrage. And so what he is pointing out right here is really important. Sometimes it may look like a panic on a Bitcoin chart when it's not a panic. It's just Bitcoin is climbing, and it makes the chart start to drag down a little bit further. And it can get real dangerous real fast if you don't watch out with Bitcoin pairs. So I want to point this out in this video. And let's go ahead and look at some of these trades that I'm doing just as an example. And as you can see, I'm getting some right here, and I sell some right here. And as it goes up, I'm letting go of some. Now I do a bunch of different strategies. I do like a mix between the account building and position trading, and I also do hybrid A/B trading, which I've got tons of videos on those. I'm not going to make a video. This is just the QFL video that I'm making to point people to see what QFL really is. In this case, you can see like, I bought a little bit right here because it's crazy how much it dropped. So from the top down, that was like 25%, on sale, and then I sold it for like 10 to 15, and then I got some right here, and then I got some right here, and then I loaded up right here, and then I let go of some, and then I bought some more right here, and I let go of some, and then it's whipping and going crazy, and so I'm like doing like account building, hybrid AB style trading, and I'm selling and I'm making free coins and all that kind of good stuff, and then I come and get some more right here, and I had more layers down here that didn't get hit, and then I sold it right here. And then as you can see, here's all my free coins that I've made. So here's all my profits, and they're listed way up here. And you can sell them however you want. This is just how I prefer to sell them. Let's go ahead and look at this one. And same with this one. It dropped down in a panic. Now, I'm sure like the biggest thing you're going to notice is like there's no like real base. And while there isn't a base, these are, I trade a lot with bots, okay? So a lot of these are just automatically placed, and I'm just managing them, watching them on the sidelines. There's more layers down here, and then it sells, and then you can see I'm letting go of my free coins right here, sell 25%, sell 25%. I'm just doing it, what feels comfortable to me. And as you can see right here, it dropped down to this lowest layer, and I'm like, heck yeah, boom. There's a lot more information that I'm trying to think that I should be explaining, but there's just not enough time to like go into the details of these trades. I just want to show you like as price is going down, boom, I'm letting go and selling it. And let's go to this one. This one's crazy. Now I put a bot on this one, and I've had free coins, and yeah, it's nuts. And I've broken this down in other videos, but I'll zoom in really fast just to show you kind of like the idea that there's no one right way to do this. But as you can see, like I let go of a huge amount right here, and then I'm letting go of like free coins right here, and then I'm buying back in, and then I'm doing the same game, and then I'm buying back in and letting go, buying back in, letting go, buying back in. Now this isn't QFL trading, but I'm just showing you like it's the mentality of like please go lower, please go lower, please go lower. Like you can see like I'm buying, sell, and then right here we're in this range, and I've got some up here to sell. So if it goes up, then I'm going to sell, and then if it goes down, I'm going to buy, because this particular coin dropped like 98% of its value. And so if it goes down further, great. I'm playing with house money at this point. This is hybrid A/B trading, what I'm about to show you here, and basically what this is just like when the price goes up, there's buyers in the market, and I know this particular coin. I know the odds. So it went down, I sold, and then it went down again, and then I sold. And you can see I'm buying super small in the beginning, super small, and then it starts to get a little bit bigger. And this just gets me in and gets me profits. But it's again, it's not QFL trading. This is hybrid account building trading, and it's just something that I can put on a coin using like martingale layering, and it goes down 55%. You know, look at how far down it goes. So it goes down to 1.1, and we're at 2.5. Okay, so that is 55% down from, you know, where the base is. And you can see, you know, it's small, medium, large, extra large. Like, these are the things that I just want to show you that I know if I had seen this, it would have made a huge difference. This one, I think I was holding on to free coins, and then, you know, there's such a thing as a pullback trade in QFL. I'm not going to go into that in this video, but there's a QFL Discord. I'm gonna have to figure out whether or not I want to share that link here or not. If you see the link, great. If not, I'm just like not trying to get spam bots pointed at it. And so, you know, you're gonna need to go into like the HODLU group. So just like Google HODLU and you know, ask for, you know, that's honestly, I'm not gonna post a link. You should just go into the HODLU group and, you know, Google HODLU, HODLOO, and go in there and try and get a QFL Discord invite link from somebody, because he's got all of his strategies in there as well. All of his teachings are in there. So you don't necessarily need his videos. Let's see what's going on with this one. This was with the robot. Oh my gosh. I don't know why I'm not like keeping, this is why you want to keep free coins, is because I bought in right here and I sold right here. And then look, it jumped up. I didn't have any saved. This was a bot. I'm not managing this. I'm super busy right now. It bought in and it did the same thing. What am I thinking? Okay. This one has been waiting. So it dropped up and then it just jumped down 23%. And I want it to come down to here. And then once this comes, then this is also a robot. It's going to put more down here and more down here and more down here. So as you can see, it's you know, if I were to give some homework to you right now that is going to fast track you doing this correctly, it is put your chart on a 4-hour. Okay. And let's go to Bitcoin and do this. Put your chart on a 4-hour. And I want you to take this paintbrush tool, and I want you to draw the letter V. Draw the letter V. Anytime you see the letter V, you know, that's kind of a letter V, whatever, you know, but I mean, really, that's the letter V right here. You see what happened right there? Yeah, I mean, that can be a check mark, but you can kind of see, look, this is a grind. And so now you're getting good just by watching this. You haven't even drawn V's, but like, look, you're drawing V's. That kind of is a check mark. You know, the sellers tried to push the price down. They were overwhelmed by buyers. That's that mentality. That's the attitude. That's kind of a V, but it's like not a lot of buyers in the market, more of like a seller kind of a thing. And then look, here's a check mark right here. And then we've got like a V/check mark right there. And now here's what you're going to do. You're going to come over to, I think right here. Yep. And you go to the price range, and you put a price range and you measure that out. Well, actually right there, because we are climbing up, and you measure that and you get the average bounce of 2 months of price action. Okay. This is your homework. Go ahead and do this on charts. And now this is what I want you to do. So as you can see, like it's very obvious that like the average bounce is about, you know, 20 to 30%. And I already know that, like sometimes it'll be 15, but you can see like these are the buyer reaction measurements. Then what you're going to do is, now that you've got all that, now you're going to put these, you can use these horizontal rays. They're really cool. You can see I'm using Alt-Trading and they automatically put the lines, but sometimes the lines, it's best that you do this for yourself. So look, here's a V shape right here. And then we go back and I want to shut this video off because I don't want it to be too long. But as you can see, I'm drawing all these bases and you're like, all right, well, so that's what we're working with right now. I mean, yeah, you can kind of count that as the base. But now what you're going to do is you're going to grab the same price range tool, okay? And I want you to do this. I want you to grab from wherever the price is. I want you to measure down 55%, okay? Look at how far down that is. So that's at 21,000. Then what I want you to do is I want you to see, like, let's go with this base, and I want you to measure down 35. These are your two numbers right here where you're going to want to care. So right now, with price at almost 50, you know, we're looking at about 25. And if you think about it, half of 50 is 25. That's all you have to worry about. Don't think about, 50,000. Just think about 50. Nice and simple. That's the power of simple math and doing 50% off. You just cut the number in half. You don't have to worry about any of that. You just know 50% off is whatever that current number is, divided in half. You don't even need to measure these down. You can just look at wherever the price was. Okay, well, the price is right there, so half of 30 is, 15. So anywhere under there, and what you can do is also you can take this tool and you can say, how much did it drop? Okay, well, this one dropped 15%. Let's do another one. This one dropped, 23%. And this is a more liquid pair, so you're not going to get as big of massive drops unless it's this kind of stuff. And I have made some really awesome videos covering all of this, and so that's why I'm going to kind of move on from here. But you can see, look, 32% on sale. And if you counted it from up here, that's 38% on sale. And if you count it up from right there, magically, there's 55%. So pay attention to these numbers, and then guess what you're going to do? You're going to be layering in small, medium, large, extra large, extra, extra large. And it's as simple as that. Once price comes down, boom, 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 it may not hit, maybe it may not hit your lowest layer. And as it starts to come up, then you will reach a point where you will be at break even, and then it's going to come back up to retest your base, which it did. As you can see, it came right back up and touched that line. So I hope this video was super helpful. Again, this is just devastating news that Quickfingers Luc's videos are not online anymore, and I'm not here to fill that position because he is one of the greatest of all time, and respects to him wanting privacy, and same with me. Like, I enjoy my privacy, and so I turn off comments, and you can't find me anywhere else, and I'm just doing this for fun because he helped me, and so I'm paying it forward by making these videos. I don't want anything else besides that. I don't want any fame. I don't want any of this stuff. I'm really enthusiastic, and I love helping people in the same way that he helped me. So with that said, I wish you the best of trading, and please go lower.